Hi, I'm Steve O'Hare from Acuity Signal Centre, and this week the market alert is sterling against US dollar. Cable, we're going to take a look at the technicals, then dive down to the new sentiment analysis and try and give some review and some outlook on where we think the market is moving over the coming week. So let's take a look at the weekly chart to start with on sterling dollar. We saw a break of the 114.10 support level. That was the swing low from the 16th of March. Now this was interesting for a number of reasons. That swing low created a double top, an intra move double top formation that we can see from the rally back up to 144, which we saw price getting close to in May last year. Now over the last well, since the start of the year, we've seen the market, the cable market, break down quite aggressively, sterling against dollar, dollar strength, and the rate at which the Fed are raising interest rates has outstripped most currencies and most economies. And we came to a crunch time last week where we saw a retest of that swing low at 114.10, and last week we broke below it and catapulted further below it all the way until Friday, got down to 108.50. Now over the weekend, Sunday night markets, there was obviously when markets open, there was a lot of volatility and a big break to the downside. We can see this a little bit more closely on the short-term charts, but the real formation that I wanted to focus on the weekly chart was this double top formation. Now the measured move target would be a measure from the high to the neckline, and we extend it further down, the same type of move, expecting a measured move extension level of 84 cents. So that's what we're looking at the moment on the weekly time frame. However, if we break it down to the daily chart, we can see what the reaction has been overnight. The big sell-off broke down below the 105.45 support area. That was the all-time low prior to this, and we created a new all-time low. On this chart, it comes in at 103.56.5. Now the levels below there, we've got that as a next support, obviously, because that's a real spike low overnight. Needs to be retested maybe. We've got the parity level, which will be a big psychological level, and then we've got below that a level at 85 cents, which is the measured move target. There will be more support in between parity and 85 cents, and we will sort of like talk about those more when it's more relevant. But initially, we've seen a correction from this break lower, and we actually saw a rally up to 109.30. Now this is based on basically a general consensus of opinion is that the Bank of England will create or bring a new rate hike in between meetings, even as early as the next 24, 48 hours. The rally has taken place on the back of that expectation. So there's a buying, the rumor that Bank of England will raise rates more aggressively than they did last Thursday. The market feels like they really haven't gone far enough with the 50 basis points rise. They should have gone stronger. Now, if we do get that, I would expect a rally back to this 114.10 level and potentially higher, depending on how aggressive they are. Potentially higher up to maybe 117.50. But overall, I still believe that we are going to retest this 103.50 at some point. So any sort of rally, I think, could be capped. So I know I'm jumping ahead a couple of stages, but that's what I see on the charts at the moment. So new sentiment wise, we can really sort of like drill down, and this is quite interesting as today we've obviously got the new sentiment has moved over the last 24 hours. It's moved slightly more negative. However, we have got a market alert which has posted a buy signal today with a 60% confidence that price will move higher in the next 2 days. Now, if we take a look at where price was, it was down at 107.10. and we have actually moved up to 109.30, so this is already on side and looking quite positive. But also, if we look at the news sentiment analysis, we can see that this turn up over the last few days since the low of the 24th up to the 26th has been a nice little bottom in the market. Price has extended lower, but potentially will stall and correct higher a little bit further. So that's pretty decent from the new sentiment side of things, or quite positive from a cable perspective. Fear index is elevated, and the news volume is obviously elevated because everyone's talking about sterling dollar. So that's how we're left. Really got to sort of see what comes out from the Bank of England over the coming hours and days to see if they have got that sort of strength to actually raise interest rates more to try and support the currency. Now, if they don't do anything, I think this will straight away be seen as a real negative component, and we could see further downside pressure very, very quickly in cable. So good luck with the rest of the week. Hope you've enjoyed the update on sterling dollar, and look forward to catching up again next week. Thanks very much.